Good morning, everybody. This is the live market open for Wednesday, November 4th. I'm Yohay Elam, Forex Crunch and Market Movers, doing the show as usual for FX Street. And we have quite a busy day today. As always, we'll cover recent developments in markets, talk about different charts and levels, the next 24 hours, which are very busy today, and of course, your questions. So if you don't see the chat under your video, please go to tlk.io/fxstreet-forex-live-video and shoot your questions in the chat. I see 11 people already in the chat, so bring it on. So we had, let's begin from yesterday. Yesterday was quite a busy day. We had UK construction PMI coming out at 58.8 as expected, and it sort of allowed the pound to flow down. The pound continued moving, more dependent on the US dollar than other currencies. Okay, then we had the US dollar in general strengthening across the board on vehicle sales, but not only that. I think the dollar cut a bid. It wasn't this way beforehand when there was a tendency to sell off the US dollar, and it didn't stop too much because of factory orders. Factory orders disappointed. They dropped 1%. They were expected to drop a bit less, but it didn't move the US dollar too much. So before we move to New Zealand, let's just take a look at, for instance, pound dollar right here. So construction PMI didn't move it too much. What we did see, this dip is related to dollar strength and vehicle sales, other stuff, and then the pound kept on moving higher. The pound has today the services PMI, which is the biggest sector in the UK and the most important one at 9:30 GMT, right after the show. Okay, now let's talk about New Zealand. So we had it also a stronger dollar sent it down, and then somewhat weaker dollar pushed it a bit higher to 67. But then it was hit by two things. First of all, milk prices. Milk prices fell. The global dairy trade fell for the second time in a row by 7.4%. And then later on, we had the employment figures in New Zealand, and they fell by 0.4%. A rise of the same scale was expected. Let's see if we have these figures right here. This is the FX Street calendar on Forex Crunch. So you can see it right here. Yeah. So this was the most disappointing figure. New Zealand lost jobs, a drop of 0.4%. The unemployment rate rose to 6%. This was as expected. Anyway, we've seen New Zealand dollar dip and remain depressed under 77. I still see 66.15 as support. Okay. Other events we had yesterday. Mario Draghi today is speaking once again just after the show. He did speak yesterday at a cultural event, but he didn't waste time and he talked down the euro. Now, what did he say? Let's get the main points here. He said basically that inflation, that the ECB has this price mandate and it needs to keep inflation intact. It's too low at the moment. There are downside risks for growth and inflation from emerging markets, all the stuff we know. And anyway, he said once again that they'll re-examine the monetary policy tools come December. Okay, keeping the pressure on the euro. So let's look at the euro dollar and see what happened there. First of all, it began dropping before Draghi. It's related to dollar strength. It sort of ticked down gradually and stabilized around here, around the 109 level, sort of a pivotal line within the range. But then Draghi kept pushing it down, and he's going to speak again. Currently, euro is sandwiched between two Draghi speeches. 109, as you can see here, is support. It was the low last week after the Fed. In any case, the trend remains down. We're quite close to 109. I believe there's a chance euro dollar could break 109 if we have more dovish words from Draghi. Depends, of course, on other figures as well. But Draghi certainly, even though he's not saying anything really new, because last week we had some other ECB members talking about that all the tools are in place, and it's not only the ECB, also the governments need to do some stuff. In any case, Draghi reiterated that the ECB is ready to act, keeping the pressure. Okay, so that will probably continue today as well. in Australia, we had data that was okay. Trade balance came a bit better than expected. And more importantly for the Aussie, the Chinese Caixin Services PMI beat with 52. It was expected to hit 51 points. Now, usually when we talk about China, we talk about industry. We talk about manufacturing, not about services. But China is trying to rebalance. And if we've seen yesterday, the same independent figures show an upgrade for China regarding the industry, still in contraction. That was sort of good news. This time we also have, we're seeing more activity in the service sector. China is trying to move from being the factory of the world to also having a middle class that consumes stuff. So this is also good news. So let's look at Aussie dollar. Look, it's challenging the same levels it reached again after yesterday's RBA decision. Yesterday, the central bank, the Reserve Bank of Australia, decided not to cut rates, and it also was relatively upbeat on the economy. That would help the Aussie dollar challenge the 72 level. Then with the dollar strength I mentioned before, it dropped a bit, and now it enjoys the okay news from Australia and the good news from China. Okay, so we're seeing some divergence here. New Zealand dollar pressured to the downside, Aussie dollar up. Okay, and other events we had before we move to other currencies. Yeah, so let's look at a few more charts before we talk about what's on the agenda. And good morning to Jax. Good morning, everybody else here on the chat. Justin, MRC, 71. Everybody, if you have any charts, you want to post them on the chat as well. I'll be glad to take a look and comment on them. So in general, all the questions are welcome, of course. So euro dollar, we talked about it. Depressed 109 is support, 108.10 further support. This was the post-recovery low seen back in July, and that's critical support. Resistance 110, 110.70, the previous range, and then 111.30. Okay. Pound dollar, the range 153.72, 155. We have the services PMI soon. Dollar yen, also the yen weakened a bit against the dollar, and we're seeing here it's almost triple top, not exactly, but 121.50 is critical resistance now for dollar yen. It seems to knock on this level quite a few times. Currently at 121, it finally got away from that 120 magnet, and let's see if it can move higher. There's nothing really Japanese related coming up on the horizon, but it's mostly about the US dollar. Okay. Good morning, Fabian. So good morning, everybody. And dollar CAD is 130.50 at the moment, enjoying higher oil prices. Okay. It's only related to oil prices at this moment because the Bank of Canada hasn't been that bullish. It's been actually dovish, lowering forecasts, have a bit of uncertainty from a new government. And oil prices, I don't see any reason for them going up, but, you know, markets can be illogical. We have oil climbing up yesterday as well to almost $48, okay? Currently at 47.70, moving up above this resistance level, breaking it quite convincingly, I would say. Further support at 45 and then 42.50. Inventories are going up according to the American Petroleum Institution. Today we have crude oil inventories. Let's see if this can depress oil, because I don't see any reason for it to rise. There's just too much supply in the world at the moment. Okay, so the levels to watch in dollar CAD are 130, of course, to the downside, 131.50, I would say here. Yeah, maybe we're seeing here a head and shoulders pattern. What do you think? Or it's a bit more complicated, it's a bit more choppy, but it is an interesting pattern. Anyway, high resistance, of course, 134.60, the 11-year high. Low support, 128.20. These are sort of the really wider levels. Okay, let's talk about Aussie dollar levels. 72.80 remains resistance. This level 72 is still battled for. Not so much resistance anymore. 71.10 on the downside and 70.65 further below. 73.60 and 74 on the upside. Okay, and Kiwi dollar 66.15, 67 and then on the upside 67.90. Okay, let's talk about quite a few events that we have today on the agenda. I even have 2 slides for that today, only for the events today. Okay, so I have UK construction PMI. Let's look at the calendar and see which numbers are expecting us. We'll have it just after the show. It's the last PMI, last purchasing managers indicator from the UK. It's expected to rise from 53.3 to 54.5. These numbers reflect, I would say, sort of weak growth, okay growth, nothing spectacular, but nothing really poor. Anyway, if we'll see that kind of rise, I think it'll be pound positive, even if it comes out as expected, because it's the biggest sector, and we had a really nice beat from the manufacturing sector earlier this week, okay? And any small miss here can hit the pound. Any small beat can boost it because it's really an important figure. Now, this isn't hard data. This is a survey, but it's considered quite reliable and quite wide and very well correlated with activity in the future, okay? This is critical for the pound. Then we have sorry, I've missed, Draghi, I mentioned him before, but at 9 GMT, just after the show, he talks once again in Frankfurt. Let's see if he hit the euro once again. Anyway, at 10:30 GMT, at the same panel in Frankfurt, we have all the way from the United States, Lyle Brainard of the FOMC. She's going to talk. She's been very dovish. Let's see if she repeats her stance or if she aligns with the recent Fed statement about talking about hiking in December. Also an important event. Then when the US traders come in at 1:15 GMT, we have the ADP non-farm payrolls, okay? It's really busy today. We have ADP, it's expected to show a lower growth in private sector jobs. This company, Automated Data Processing, manages a lot of payrolls in the United States and has a lot of impact. This is not always, this survey, the result is not always fully correlated with the actual non-farm payrolls, with the actual private sector segment of the non-farm payrolls on Friday. Nevertheless, it's certainly a market mover. Last month we had 200,000, which was A-okay, and eventually the real non-farm payrolls was below that number. But let's see if we have a downwards revision this time. And if we have what number we have, it'll have an impact on the expectations for the NFP. Then we have trade balance from the United States. It's expected to show a smaller deficit. Better news, let's see. Instead of 48 billion of a deficit, only 41. Not such a market mover for the US, but at the same time, we have the same figure in Canada. In Canada, we also have a deficit. It was 2.5 billion, quite disappointing last time. This time we're expecting also a narrower deficit of 1.9 billion. More of a market mover for the Canadian dollar, because in the US we have at the same time ADP. Okay, the numbers anyway are for September, and it's a bit old, especially for the US when we have all the time fresh numbers. And also a week or two ago we had the goods trade balance, sort of a preliminary partial report, so it's not that important. But then we have at 3 GMT a really important figure for the US ISM non-manufacturing PMI, long name for basically an indicator of the services sector. So we have expected more of the same, more or less, 56.9 to drop to 56.5. It's the biggest sector, most important in the US. What's important to watch here is also the employment component, if it's still in growth territory above 50, because with the manufacturing PMI, ISM manufacturing PMI, we had it an okay number as expected, but the employment component came out under 50. 50 separates growth and contraction, and we had it at 47.5, if I'm not mistaken, 47 point something. And this clearly shows a loss of jobs in the manufacturing sector, which is quite worrying. So manufacturing is small, but job losses are not something anybody wants. And let's see if in the service sector we still see job growth. I think we'll still see that, but nothing, of course, is certain. Okay, so that's what's going on. That's really critical for the non-farm payrolls on Friday. We have 2 big hints, ADP and NFP. Okay, good morning, Rob. Good morning again to all the others. Now, the big event for today also, at the same time that we have the ISM non-manufacturing PMI, is a testimony of Janet Yellen. Janet Yellen of the Federal Reserve, the chair of the Federal Reserve, she's speaking in front of Congress. The topic is not monetary policy, the topic is regulation, but this doesn't mean anything because she'll be asked questions by the members of the public and she'll have the chance to answer. And they'll ask her probably about monetary policy. Usually she tries to dodge these bullets to escape providing clear answers, but 1 week after the Fed decision, and with the next decision only far away, she can reveal some cards, she can try to guide markets. So I believe she will say something interesting. So at the same time, at 3 GMT, when she begins speaking, she'll read out her prepared statement about regulation. Nothing market moving, but I believe that around 3:30, 4 GMT, when the questions will begin, she might give us some answers, and that could be quite rocky for markets. Okay, so that should be also quite interesting. I see that as the main event of the day, but again, it's a very, very busy day. Okay, let's go back to the more events today. Just after Yellen, when she'll begin giving us perhaps some answers, we have crude oil inventories, important for the Canadian dollar. Then at 7:30 GMT, we have Bill Dudley, number 3 at the Fed, I would say, the president of the New York Fed, talking. Let's see, he's been sort of very, very in the middle. When he talked in August about hesitation regarding raising rates, he actually sent a signal that nothing would happen in September. Let's see if he still talks about a rate hike in December after the recent data. And so we have another central banker. Of course, Yellen is more important, but also his words, because he's not talking about regulation, he might have more of an impact. At 10:25, we have Governor of the Central Bank of Australia, Reserve Bank of Australia, Glenn Stevens, talking. Let's see if he tries to talk down the Aussie, especially after we've seen it on the rise. Number 2 at the Fed will speak at midnight GMT, Stanley Fischer. So we have all the top head honchos of the Fed, Yellen, Dudley, and Fischer talking. That will be quite interesting. And before the show tomorrow, we have German factory orders. We'll talk about that tomorrow as well. So it's an extremely busy day. All the 3 top people at the Fed are talking. 2 other heads of central banks are talking, Mario Draghi and Glenn Stevens. Critical figures for the NFP, lots of action. We're already seeing quite a lot of movement. Do you have any questions? Before we'll talk about more charts and other events for the week. I see quite a few of you in the room and in the chat room, and we'll be glad to answer questions. So let's see, let's talk about other currency charts. Dollar Swiss. Dollar Swiss back on the move again. Weaker euro means a weaker franc. Why? Because the Swiss National Bank is intervening. Resistance 99.50, currently at 99.28. Support at 98.15. If we see the euro dollar fall a bit more, lose 109, I believe we'll also see parity in dollar Swiss. Okay, these are sort of the lines to watch. Maybe, well, we'll need to fall below to reach parity, but maybe at 108.05, 108.50 on euro dollar, we'll see parity on dollar Swiss. Euro Swiss, yeah, because that's the level of euro Swiss. Current level 108.05, more or less very much in range. Swiss National Bank trying to weaken the franc. The low reached last week was 107.50. The high, the recent high was right here at 109.20. 110 is further resistance on the top side. Okay, euro pound every day, a new low. Okay, so we're seeing it sort of walking down these stairs. It stopped beginning at support 71.40, then battled with this line. Now it's resuming its falls 70.84. It's the lowest level in quite some time, isn't it? Yeah, in over a month, in 6 weeks. Since mid-September, it hasn't seen these levels. 70.25 is further support, and then 69.50. Okay, resistance 71.40 and 72. Interesting cross. We're seeing monetary policy divergence at play. We have in the Eurozone ECB talking about more stimulus, and in the UK we have Super Thursday, that's tomorrow, where the Bank of England is expected to continue telling us that the next move is a rate hike. We'll see how close it is. It always gets closer and then moves away, but anyway, that's the next move for the BOE, and the next move for the ECB is more monetary stimulus. As we speak, it's falling. Euro yen, also here we're seeing the euro fall, 132.32. Support at 131.50, resistance 133.15. Okay. Pound yen, one of the favorites, stronger pound, finally moving higher. Yesterday we've seen it break even above 187. It's a very gradual grind higher. The real resistance that I see is at 188.10. The high we've seen in September. This is what I'm seeing here. 186 turns into support. We're seeing here higher highs and higher lows. A question from Fabian. What reactions do you expect today, Draghi's speech? Well, I expect from Draghi to continue saying whatever he already said, that the ECB is ready to act in December. The topics he might not get into too much detail, but he has 3 tools in his agenda. Let's remind everybody of what Draghi did to the euro. Here, you see this big fall. It was on October 22nd, and I have this slide right here, and I believe he'll repeat his words more or less, sort of trying to depress the rebellion. Okay, in the ECB rebellion. Only a few members don't want this. So he has 3 tools: opening the door, extending QE beyond September 2016. Remember, he announced a plan to back in January to print euros at a rate of 60 billion per month up to September 2016. That's 1.14 trillion euros. He will probably say it'll go towards mid-2017 in December or beyond that, or to infinity without any limit. Second thing is expanding QE beyond 60 billion a month. It can be 80 billion. That would be showing the money, not only forward guidance, but immediately printing more money. And the third tool, perhaps the most potent one, is the deposit rate. Currently, it's at -20, and a drop, sort of, if a commercial bank parks money with the ECB, it has to pay, it's getting punished. It has to pay the ECB for holding its cash. -0.20% is the interest rate. And it's also not only that, it's also the limit of where the ECB can buy bonds. Bond yields with bonds with yields that are negative under 0.20, -0.20, are not bought by the ECB. So if it pushes it lower to -0.50, for example, then the ECB can buy more bonds, like German bonds, which are quite expensive. Suddenly they become not that expensive. Okay, so these are the 3 things you can do in terms of action, and you can express once again worries about inflation, worries about the exchange rate, and we use the word vigilance to express also determination to act. Okay, another follow-up question regarding that from Fabian. Could it make euro-dollar fall to 109? Yes, of course. 109 is very close. That's support line. I think that if Draghi talks, it can even fall below 109. The next support line is 108.10. Let's just show it to you here. Maybe the 4-hour chart could show it. So 109 was the previous low. We're getting quite close. 108.10 is right here. That was the low in July. Okay, and not only in July, it was the lowest level since well, back here in April. So that's also interesting to watch. Okay, so that's if we have a clear break and not a false one. We had too many false breaks with euro dollar. If we have a clear break below 109, 108.10 is the next support line. Next question, pound CAD. Pound CAD, we talked about it in the show in the past. Right, so we have the chart here, currently at 201, very stable in range. Let's put some lines here in range. More or less here, right? So the range, yeah, at 2, around level of 2, up to 203, that's the current range, very narrow. Both currencies have been resilient. I see the pound is much stronger than CAD. That's because in the Canada, situation is sort of worsening with low oil prices, and in the UK, the rate hike is expected. So this is the range I'm watching. Below that, we have 198, and above we have 205. I believe that the pair has potential for the upside according to the fundamentals. We'll have the UK services PMI. Of course, it can go bad, but assuming it's okay and oil prices eventually fall, I see potential for the upside. Okay, question about S&P. Well, I don't always cover currency, stock markets. Let's see if I can get that chart up for you and comment regarding where the S&P is going. So S&P 500, I assume, right? So let's bring it up here on the chart. Yeah, it's the main index. We're looking at the right one you're asking me about. Anyway, it's currently at high levels. Everything looks great again. 2108. Let's draw some lines here. I know that many of you are looking at it. So in general, do you want me to talk more also about stock markets, about indices, about technicals? Of course, the show is about Forex. I'm a Forex crunch. The show is for FX Street, but we can always talk. All markets are correlated, of course. So here are the levels to watch. Some sort of basic technical analysis, nothing extraordinary here. Okay, so we're not far from the highs, this double top here, right? Yeah, double top here at 2137 or 2140 if we want to talk about round numbers. Nice rises along the way. Support here at 2040 and further support at the round number of 2000. We can also add this as a support line, 1980, but more serious support at 1870 and 1833. We're back to the previous range. We had this range for quite some time this year, this range of between 2040 to 2140. So yeah, I promised in the past to talk about S&P, and now we're doing it. Yeah. So stock market. Well, it's always a stock market is composed of individual stocks. Some are doing better, have good sales, good prospects. Some are doing worse. But of course, there's also a general movement in markets depending on what the Fed does, what other central banks do. Well, a lot depends also what's going on in the United States economy. Assuming the Fed hikes, assuming the economy is doing okay, I don't see a crash coming in U.S. stock markets, but I'm sure there is some froth in some stocks, perhaps in the immediate aftermath of a rate hike. We could see it as a sign of confidence, but afterwards it might cause some cash problems for some companies. It's hard to tell. The correlations have been quite mixed by stock markets and Forex, but there are, of course, correlations. Anyway, these are the levels to watch, 2040 and 2140. Fabian answered the question, preferring not to talk too much about stocks, more on Forex. Yeah, okay. Of course, everything is Forex, but talking just a bit about stocks is okay. Another question that I jumped over before: do you think Euro Pound will reverse at 70.17? No, I think the direction in general remains to the downside in the Euro Pound. That's a support level indeed. I see it as 70.25, but it's more or less the same. No, I don't, but I think it's support, but not a really strong support line. So I see the pair continuing to fall down. Of course, it depends now more on the ECB than on the Bank of England, because the Bank of England is waiting for the Fed. Okay, so that's weak support. Stronger support is here at 69.50, or if we maybe move it a bit lower, yeah, 69.40 more or less. I see that as stronger support. So minor support at 70.17 or 70.20, and stronger support below. Another question from Abel. Just sharing my view, dollar yen weekly chart, head and shoulders. Do you agree? Thank you. First of all, you can post images of charts here, links to images, and you can talk about them directly. Of course, put them on the screen here. Let's try to see what you're talking about. I have too many lines here. Yeah, I can see the head and shoulders. Yeah, it's quite clear. No. Thank you, Bill. I must say I didn't notice it, but yeah, I hope you can see through all this mess. Anyway, we had this huge rise here late in 2014. Then we can see this as a wide shoulder, and from May we had this move up here towards the head, peak of the head coming here in early June, more or less mishmash up to August. Then we had the Chinese stock market crash, and then back to the shoulder once again. So yeah, I see the same kind of level, head and shoulders. If the Fed hikes, dollar yen could move higher, of course, but if we don't have a rate hike, and if the Bank of Japan doesn't do anything, and currently didn't do anything in the October meeting, you could see it fall below the shoulder line. We have another question. Let's see if I didn't miss anyone on the way here. Why don't we see a crash in the US? What kind of crash are you referring to? In the stock market, in the economy, we're seeing some kind of slowdown, but not some kind of crash. Anyway, for the stock market, first of all, the economy is doing okay, and secondly, the stock market is still moving, still has this fuel coming from the Fed. Okay, so QE stopped. We're expecting a rate hike, but QE didn't reverse. That means that the Federal Reserve is still has a sort of bloated balance sheet, 4.5 trillion US dollars. For every bond that matures, that expires, it buys another bond, making the total unchanged. So there's still lots of support. The ECB is creating fresh money. The Bank of Japan is creating fresh money. So that also supports stock markets worldwide. Okay. Another question, a question from 71. What is the directional bias for the next 24 hours for each instrument, and why? Okay, I'm not going to talk about all the currencies, but in general, I see, let's go back to euro dollar. I see euro dollar continuing to the downside. That's my bias because of Draghi's speech today, another speech tomorrow, and the speech he had yesterday. So he's going to keep the pressure on. In the US data, I'm not sure it'll be that good because we haven't seen good data recently from the US, but it's good enough to support a rate hike. Yellen will probably leave the door open once again to a rate hike in 2015, just like the statement, and that can pressure euro dollar. Pound dollar, a lot depends on the services PMI. If it's good, we can challenge 155. If it's bad, we can challenge 153. If it's 70, 153. Depends a lot on UK data. In general, the pound is relatively strong. Dollar yen depends on Yellen. 120, 150 is the line to watch. My bias is towards the upside. Dollar CAD, I see the fall in dollar CAD is strengthening in CAD is unjustified, and I think we might have a reversal. Aussie dollar depends on Stevens mostly. governor of the RBA, but in general, I think it can fall in the eventually. New Zealand dollar was hit a bit too hard. Not everything is that terrible there. We can find perhaps a bounce from 66.15. So this is the bias I have. Benny asks, so what happened in August? Well, in August we had a crash of the Chinese stock market. Actually, the crash began, the fall began in June. Actually, it was, of course, an undoing of a bubble that we had in China. Not sure I have the Shanghai composite. Let's see if I can pull that up. Anyway, what I'm trying to say is that we had this move in euro dollar as a reaction. The euro worked very nicely as a safe haven back in August. In China, we had a bubble, and we had stock markets going up like a casino too fast, and then it fell. And then the Chinese authorities began intervening to try to support markets, and which was seen also as a sign of panic. And then we had weak figures from China, which was also seen as trouble there. And we had stock markets crash late in August and thin liquidity. We had the yen and the euro strengthening. And then we had, of course, some stabilization because, of course, when there's panic in the markets, some people take the opportunity to buy. Anyway, we had this huge move here higher up to 117.12 in euro dollar and then back to the previous range. Okay, that's in our context of euro dollar. Okay, more questions? Yeah, so yeah, we have a long, not so long. Okay, talking about the US stock market and stimulus, there are some people that are talking about the appliance of even negative rates from the Fed. It sounds totally contrarian since everybody's waiting for the hike, but we haven't seen the inflation targets reached either. Your opinion? Well, it's a great question, and not only related to stock markets, of course, it's related to the strength of the US dollar, in general, the US economy, yes. So in recent months, we've seen some kind of slowdown in the United States. We've seen non-farm payrolls register less than 200,000, 142 last time and 136 in August. According to the revisions, we'll have fresh data this week, of course. We'll see revisions and we'll see also fresh data. We had poor retail sales, fall in factory orders, weaker PMIs, especially in manufacturing, and inflation. It's not that bad, okay? Core inflation is at 1.9 and the Fed's preferred measure at 1.3. And in general, when we have an economic recovery, first we have GDP growth. Secondly, we have more jobs. And only third, these jobs, people have more money, wages rise, or in general, people have more money and prices move higher. So the Fed looks at inflation expectations for the future and not at current inflation. It's also important to remember that current inflation is really skewed by the fall in oil prices. Now, the biggest fall in oil prices came at the end of November last month. So by December, January, I think we can have the base effect. The original, the year-over-year fall in oil prices already removed from the system, and we can have it. So it's not inflation that is to worry about, but the economy in general, if enough jobs are created. The Fed has two mandates, inflation and employment, okay? So these are, and of course, the NFP on Friday, we have to look not only at the number of jobs, but also at wage inflation, at the average hourly earnings. It stood on 2.2 last month, and now it's expected to remain the same, 2.2 year over year, and we'll see if it is going to be that way. So, and you also mentioned negative rates. I think that's a bit far off. Yeah, that's another tool the Fed could use. It's being used in Europe, and the world isn't collapsing. Japan is considering that, I think, as well. I don't think we're doing that bad. Also, people are talking about QE4, okay? Fresh printing of US dollars. Also, that I think is a bit too far. I think, yeah, the Fed would not like to choke the recovery. The Fed would not like to reverse its policy to lose its credibility later on. But it also has to maintain its credibility regarding bubbles, okay? So the Fed is partially blamed for creating the housing bubble. I think there is some, it has some blame to take there. But it would not like to create fresh bubbles, like let's say in stocks, let's say in housing, in commodities, in what have you. So I'm still optimistic about the US economy. I think inflation will eventually come, if assuming things are going well. In general, if we divide the world into three zones, I mean, very, very rough division. The United States, China, and Europe. Europe is the sick man of the world now, the worst economy. A lot for the United States and for China, a lot depends on Europe. Okay, so I hope provided some answers to your questions. Let's go back to the chart. Euro dollar at the same place. And I think, yeah, we're getting closer to the end of the show. Any more questions? Let's see. I'll just cover in the meantime the more big events for the week. Okay. So, or recap what we had so far. So on Monday, Chinese Caixin manufacturing PMI came out better than expected. Aussie positive. US ISM manufacturing PMI were okay, but the employment component is quite worrying for the US economy. We had the rate decision in Australia on Tuesday. It was positive for the Aussie. It wasn't that bad. Mario Draghi began talking yesterday, continues today right after the show, and then tomorrow as well. And he's been pushing the euro lower. Let's see if we can break 109. And New Zealand deployment data has been worse than expected, weighing down on the Kiwi, but I think we have some potential for recovery there. Today, huge day. Yellen testifies, ADP, NFP, ISM non-manufacturing PMI. We talked about that earlier. Tomorrow, it's all about the pound. It's a super Thursday. UK rate decision, plus meeting minutes, plus the inflation report. We'll talk about that in detail tomorrow. And of course, on Friday, the non-farm payrolls. So this is the first week of the month. Lots of things going on in markets. Okay, so I guess it's time to wrap up. This is the wrap up for the live market open of Wednesday, November 4th. Today is a very, very busy day. So far, we had quite a few events in markets, weaker than expected figures in the United States, mostly helped commodity currencies, less so the euro and the yen. Euro is pushed down by Mario Draghi, and the yen also, we have this risk on feeling, so the yen is less in demand. We had bad figures from New Zealand. Employment and milk prices both fell. That weighs on the Kiwi. Draghi kept pressure on the euro. Currently 109.25 in the lower range. 109 is support. 110.70 is resistance. 108.10 is lower support. Pound dollar awaits services PMI just after the show, and this is the most important sector for the UK. 155 and 153.70 are the lines to watch over there. Dollar yen 121.50 is now even stronger. Resistance 120 is support. Further stuff that we had, good Chinese figures helped the Australian dollar. We have a speech by Glenn Stevens, the governor of the RBA. Currently, Aussie dollar at 72. But let's see what Stevens does. 71.10 is support. 72.80 is resistance. All in all, it's a good week for the Aussie, but perhaps Stevens will try to talk it down. We have today big events in the United States, starting early with Lyle Brainard talking in the European session. She's been very dovish. At 1:15, ADP NFP expected to show 180,000 jobs gained. Huge, important hint for the non-farm payrolls on Friday. U.S. and Canadian trade balance, mostly important for CAD. ISM non-manufacturing PMI, biggest sector in the United States, services. So it's expected to show more growth in the United States, but let's see how it goes. Janet Yellen testifies. The topic of her testimony is regulation, banks, financial sector. So when she begins talking, markets will not move too much, but perhaps she'll be asked questions, and she can certainly move markets. But that's not all for today. We have for Canada the strengthening loonie. We have crude oil inventories. Then number 3 at the Fed at 7:30, Bill Dudley talks, Stevens, and then Fisher, number 2 at the Fed talks. Extremely busy day today. More currencies to watch. Dollar CAD, I think it's unjustified the fall. 130 to 131.60 is the current wide range. New Zealand dollar support 66.15 to 67.90 if you wish. The wider range. So that's sort of the wrap up for main events and what's going on. But I see we have more questions. So can Yellen later in the day, for another question, sorry, from Benny. If we look at macro data, things worldwide, that's WW looking very bad. Are you referring to VW, Volkswagen? Anyway, yeah, the world is slowing down. Doesn't look so good. The US is currently the locomotive, carrying the whole world with it, but we're not sure if this can continue for too long. We need a stronger Europe, and Europe will struggle to strengthen with Volkswagen going down, but let's see what's going on over there. Sorry, Volkswagen is not going under, but it's a big impact. Slowdown there is impacting the German economy. Another question from Fabian. Can Yellen later in the day counterbalance Draghi, pressure on Eurodollar and make it bounce back up? Or today's Yellen's speech is less important for markets? Well, first of all, Yellen is always important for markets because she's the most powerful central banker in the world. I think she'll add to pressure on Eurodollar down rather than countering Draghi. Why? Because the Fed in its recent statement was talking about a rate hike in December, sort of alluded to that with when the Fed will decide next meeting about the rates, it will take into account a few factors, but they did. Let's see if we have this slide here to remind you of the Fed. So yeah, they were sort of okay about the economy. They were less worried about also recent global developments, and they talked about the next meeting about setting the rates. So I think that Yellen will repeat that and not show too much worry. Okay, so in this case, it can push Eurodollar even further below. Okay, but who knows? It also depends a lot on the data, and maybe she'll skip talking about monetary policy all that much. We'll have to wait and see. Draghi, in any case, wants a weaker euro. So I'm bearish. Sorry, I'm bearish on the pair today. I see it falling, extending its falls on both central bankers, but we'll have to wait and see about that. It's of course. Also remember, we have more Fed speakers, so Lal Brainard can be more dovish, but she is less powerful, even though she has a permanent seat, than Stanley Fischer and Bill Dudley, and of course, Janet Yellen. Okay, so I hope this answers the question. Anyway, it's a very busy day. I wish everybody successful trading. We'll be here tomorrow to analyze everything that will happen today, and of course, talk about the NFP, which begins after today's event, will be much more in focus. Remember, we'll be here also tomorrow at 8 GMT. Remember, your questions are welcome. And if you like the show, of course, and you have a colleague, friend, fellow trader in a trading room or whoever, let them know about the show. Bring them on. So that's it for today. Thank you, everybody, and see you tomorrow. Bye-bye.